Good afternoon, team. Happy Tuesday. Market closed about a few hours ago, and wanted to go over our positions and what I'm seeing in the market so far. So we are hitting our head on the 21 EMA, like I mentioned yesterday. We had three nice up days right up to this line here, and what happened today? We went straight down. And we ended on the lower end of the day. The good news is it wasn't a really high volume, so that's within all, it's a positive sign. And if you want to, kind of look at it also from this perspective, it's still a little higher high, from these guys, and obviously from here. It broke yesterday's low, but I'm trying to look at the positive here. Again, we still need to break the 200 right here and the 50. So until we get this, we're not going to have a sustained up trend, and all our breakouts are going to, they're not going to hold. So we take them if we see them. The market is good for a few hours. They go up 3 or 4 points, and then when they start coming back, we get out and take a little bit of change. So that's kind of what's been working so far. So I'll keep us nimble. Basically, we've had sideways market. This is a 15-minute. We kind of been in this range right here, and we've kind of been going. If you notice, lower. This is still kind of a higher low, but if you kind of look at it this way, lower high. I mean lower low, lower low. So sideways, we went down. We went sideways, we went up. We're going sideways. Now I'm thinking we're going down, then we go sideways, then we go up. That's just the way the market is. It'll be hard. It'll be hard for the market to kind of go from here to do this. It may do this eventually, but again, it's just there's a lot of turbulence out there. So let me go over real quick. What I currently have that's working, APA. We took this entry right here, and that's been working. So, not too bad. Just let it work. Kind of raised my stop to the low today, so I got a guaranteed profit. SCX. That one also was it SCX? I don't think it was SCX. SLX. I don't have it correct. SXC. SXC. Sorry about that. Apologize. Can't understand my own handwriting. SXC. That was the entry right here. It went down a little bit. I kind of got stopped out on 50% of the position, but I still have 50% still working. So up 5% today. I'll take it. It's a little bit after hours still going up, so hopefully tomorrow will continue. We shall see. ERF. That's still working. Took this entry right here, and it's still holding above it. So my stop is below the breakout. So I'm letting that one work. CPG. So the ones that are still working, took the entry right here in this breakout, still holding, letting it work. SQQQ is my hedge. That one's just doing its thing. Was up 4% today, so I kind of made a little bit of money on this one today to offset my little paper cuts of 1%, 1.5%, 1%, 1.5%, 2%, 1.5%, 0.5% losses on the ones that I got stopped out on. I would say about 60% of the ones that I got stopped out on were about a 1 to 2% stop loss. About 40% I made 2%. A couple of made 8%. So it kind of balanced out. It was like scratch. Maybe I was down like $300 net, and then my hedges put me over the top, and then my futures hedges also put me over the top. That was a good like $400 gain on the futures hedge today. and then this one is up like $600, something like that. So again, just trying to do what I can to keep the portfolio afloat and not, have a big drawdown. So just using every tool in my toolbox that I possibly can. Hess is flat. I still have Hess. I have a half position. I got stopped out yesterday for a profit, but I jumped back in. It's holding its own. It's still holding above 100. So hey, I'm letting it work. EGI, that's the one that's a little bit underwater. It kind of broke out, kind of picked its head above 6. I jumped in, and it came back inside. It's just a small, price that I think I'm down like $11 or something like that. So that's why it's like, in theory, I should be stopped out right here. But since it is oil, number 2 group, I'm giving it like one more day. If tomorrow, if tomorrow's a negative day on this stock, I'm out. So that's really the only reason. This was a $60 stock. I definitely would have been out, taking my 1% loss, and then that would have been it. I think I have a cost basis of like 601, and it's at close to 593, and at the market it's already at 6. So I'm pretty much flat. I mean, the 11 cents or so that I was $11 I was down. I guess if technically I'm currently like only down like $1. So I'm letting that work. TECK, this one, it broke out. We took the entry here, and it reversed right back inside. Since it stayed positive on the day, I'm going to give it the benefit of the doubt. I have a 1.5% trailing stop on this. So if tomorrow, it goes down, 1.5%, I'm going to get stopped out. So that'll be my loss about 2% because I'm down like 0.5% right now on this. So let me see what else. GOGL. I currently have this one. I think I'm down like 1.5% right now. I did not get stopped out because I'm still holding on, to break this right here for me to stop out, and it stayed positive in the day. So if it would have gone negative and taken out yesterday's low or the previous day, if it would have broken this line here, I probably would have been 100% stopped out. But I'm holding it for now, and I actually have a 1309 trigger. So if it ever gets to 1309, I'm adding. So that's a good one to put on your list. 1309 on GLGL. Okay. So now Facebook, my Facebook butterfly, I have the 190 right here, short puts. So as long, down, big today, but it's still above 200, still above 190. So from here to Friday, if it stays above 109, I make about $700 on this total. So that's a pretty good trade, which it's about 37-38% return. What's the other one? The one I put on today, SMH. I sold the 220 put, which is like I think somewhere right here. So which is like right below, right in this little congestion from way back here. So this area right here should play some kind of support. Even the 250 should be a nice support area again, because he held it here and he held it here. So I'm pretty comfortable with a 220 for April. I picked up about, I think it was what like $900 or something like that credit. So just letting it work. These are going to be more long-term plays. I'm buying it back with a 50% target goal. So once it goes inside like 190 from the 460 that I sold it at, I'm buying it back. Or if it gets closer to like within 2 weeks of the expiration in April and it's still above the 50%, I'm not there yet, I might just roll it to a couple weeks and pick up more credit and just keep receiving rental income basically on these short puts. Now for stocks that I scanned today that I'm looking to set up for tomorrow and next week, ARCH 125.22. taking out these high right here, 125.22 ARCH. SM 38.51. 38.51. I want to take out today's high right here. It took out today, but it came back inside, so I wanted to prove itself. So 38.51 on SM. Again, be nimble with these. If these trigger, they could easily come back in and reverse on you. So very, very tight stops. If they trigger at all. WLL 80.03. 80.03. I want to take out this high right here. It might, ideally, this is a nice little cup for me. Ideally, it consolidates here this way, so you have a nice little handle, and then it takes off. MGI. I'm looking at 23.34, 23.35, 23.35, taking out this 23.34 high, 23.35. See how it kind of got almost there, but it didn't take it. That's why we have these trend lines, you know, because huge two up days, but you know, so you know, it can kind of come back inside again. Just like if we were looking at this one right here, we had all these nice up here at 20, but never made it out here, and it kind of came back inside. Over here, it broke out. You took it at 22.10, and you got stopped out, you know, at 21.80. So you lost, you know, $40 if you bought 100 shares, and you avoided all this drama here. So the same kind of concept. I want this breakout to confirm. CRC 43.35. 43.35, which is like this high right here. I want to break this little shelf right here. Okay, early entry, so go small. But I mean, look at this growth. Look at this growth. 610, 653, 760 next year. I mean, that's impressive. You can't discount that. CVE 1618. 1618. Nice little shelf forming here. I want to take out this high. PBF 1815. I like how it's holding the 50. You know, it kind of like came down here. It held 21, never made it, and the market is really hard. So, but this last couple of days, it has hit it and it has held. So that's pretty good strength, holding that 50. But I want to see this shelf break right here. So I want 18.15 before I take a position. Hopefully take it to 20, take some profits, and then add on at 20.15. Actually, let me put the alert here. So at 20.15, I'm adding on as well. But initial entry 18.15, and then here maybe take 50% off. And if it breaks down, you get off, and then if it keeps going, you add on. That's how I'll be trading this one. Again, nice growth from negative to positive and growth and continued growth. 96%, 126. I like it. And the last one, I'm going back to HSY, Hershey. Actually, Hershey triggered today. I had it at a 204, 205 target, and today it triggered, but it kind of came back inside. So I probably would have still been in. I never took it. I never did take it. But I redid the trend line here. So my new entry now is 206.15, which is today's high. 206.15 on Hershey. If it takes out today's high, I'm a buyer. And then I'm adding at 207.83. Okay? Okay, I hope that helps, guys. Stay safe, stay nimble, don't be too aggressive. Oh, I also wanted to do a quick little lesson on, again, just to reiterate what to look for. Okay? An AMR. That's why I like to, that's why you buy on shelves on breakouts, because look at this. 73.05. This right here, it broke it, right? And then it came right back inside and you got stopped out. And then you go back to it again. The next day, it broke it. So let's say you would have gotten back in at 73.10 here. You got out at 72.90. You lost $20 or whatever it was. and then you got back in here again at 73.15, 73.20, and you rode this puppy all the way down to like 85, up to 85. I mean, that's how you trade this. I mean, this thing gave you like plenty of entries right here at 24.65, 24.70. You got in, you got out, you lost about 1%. Then 27 right here, right? You got in at 27. You never got stopped out. You never got stopped out. You probably got stopped out here at 35 or something like that. It's a good profit. Then you're building another nice little shelf here. You get in here, or let's say you get in here at 42. You take this at 42.50. You take it all the way to like 55 or somewhere around there. Nice trade. And you get out. Then you set up again. You take it again here at 56.25. Whips around, but it never really stops you out. It stays above it. It stays above it. It stays above it. You probably, maybe in this one you got stopped out, but you would have taken profit somewhere around here. So you probably took it all the way to like 61, 63. You would have made 5 points. And then again, it set up again at 69. And you never, so all this drama, you avoid it. And then you take it again here at 69.30. You take it to 73, and you get stopped out. And then it sets up again here, and boom. So that's the hit. That's the the life of trading the stock. You got frustrated and stopped out a couple times, but what? 1%, 2%, 1%, and then you got 3 or 4%, 5 or 6%, and you got like here almost 15, 20%. So again, if you started doing this back in June, in less than a year, you probably made about 30% on this stock all throughout. So if you just traded this one stock for 1 year, you would have made 30% on the year. Who wouldn't be happy with a 30% return on a year? So just think of it that way, okay? Take your shots. If we see, let me clean this up. If we see opportunities, if I see a breakout, I'm going to take it. And if I get stopped out, I get stopped out. If I get 10 paper cuts at a 1%, 1%, 1%, that's fine. I'll get the 8, 9, 10, 12%, and I might lose, $50, $60, $100, $60, $200, $100, but then I'm gonna make 7, 8, I'm gonna make 5, I'm gonna make 3, I'm gonna make 7, I'm gonna make 8. That's how you trade. Just be persistent. Don't quit. Don't give up. Don't get frustrated. Don't get discouraged. The market is gonna chop you around. We got stopped out today a lot. It didn't frustrate me. I wasn't frustrated today. Perfectly fine. I had a plan. I had an entry and I had a stop. And I was fine with that. I was fine with giving up 1% on like 5 or 6 positions, and then I made about 8, 5, and 3 on the other 5 or 6 positions. So net, I was flat. And then with my hedges and so forth and being creative, I made a little bit of money today. So again, on a really, really bad tape. I mean, the market was down 200 points today. Really bad market. And you still come out flat or a little bit up or even a little bit down. So that's great. If we have a good market, if we have 100 point, even 100 point up day on a regular 50 point up day, 100 point up day in the market, you're gonna make 7-8% on that day on your stocks because they're gonna go because the ones we're trading are the ones that are working. They're leading industry, leading group. They have high growth rates. They have accumulation. I'm looking at the best of the best. So if the market is working, what's going to rise to the top? The cream, the best of the best. Not the bottom feeders. The best of the best is going to rise faster and greater. So always keep that in mind. So I digress. And again, please, below the 50, get out. Get back in when it's above it. Simple. You would have gotten in right here, made money.